Hi, I'm Rob with Federal Finance CPE, and today we are going to talk about how to make adjustments to your obligations in federal accounting. We're going to start off by just defining what an adjustment is to us. Then we're going to go into the accounts you use to record adjustments. We're going to discuss when to adjust, how to post these adjustments, and then go through an example of posting a recovery. So the first question you're going to ask yourself: can you adjust obligations after they've been recorded? Yes, you can. But how you adjust those obligations is going to depend on the circumstances of why you're adjusting and the timing of these adjustments. You're going to have an upward or a downward adjustment, and it's going to be strictly based on a dollar amount adjustment. So let's say you have a $100 obligation. If you're increasing it to $110, that's an upward adjustment. If you're decreasing it by 10, that's a downward adjustment. Now, we want to be clear too that errors or mistakes are not adjustments. They are errors, and there's a specific way of posting and flagging prior year adjustments for errors with an attribute. Also to note, adjusting your obligation accounts, we as we mentioned before, it's dollar value. So if you're changing something in your accounting string, that's not an upward or downward adjustment, such as an attribute. So we'll go a little more into those later. We'll go through some examples of how and when you post an adjustment to your obligation. Now, before we go to the specifics, I do want to walk through the adjustment accounts in the USSGL Chart of Accounts. So, if we're going to adjust an undelivered orders, we have 4871, which is your downward adjustments of prior year unpaid undelivered orders. Call those recoveries. You have your 4872, your downward adjustments of prior year prepaid advance undelivered orders, refunds collected. Then you have your 4881, your upward adjustments of prior year undelivered orders, unpaid, and your 4882, your upward adjustments of prior year undelivered orders, prepaid. Now, we're moving on to your delivered accounts. So your 4971, your downward adjustments of prior year unpaid delivered orders. So we call these recoveries. Then we have our 4972, our downward adjustments of prior year paid delivered orders or refunds collected. Then you have 4981, your upward adjustment of prior year delivered orders, obligation, unpaid. And you have your 4982, your upward adjustments of prior year delivered orders, obligations paid. All right. So you'll notice of all those four obligation accounts of 4801, 4802, 4901, 4902, we have an account for our upward or downward adjustment. You'll notice with your delivered orders, it's going to kind of depend on circumstances. So now we're going to talk about when to adjust. When do you need to adjust the accounts? Well, so we kind of mentioned earlier it's going to depend on the circumstance. So the first scenario we're dealing with is you are adjusting an obligation in the current year, the year that you obligated. Now, you'll see here if you have a decrease or increase in your obligation, or modification, you're going to adjust to your obligation accounts. Same thing if you're changing in the budget structure. You know, you had an attribute. Maybe it was reimbursable, non-reimbursable, something like that, or another attribute in your accounting stream. Making these changes in the current year obligation is pretty straightforward. And that's whether it's paid, unpaid, or paid. You'll see it's the same thing. Now, this is where we start using our adjustment accounts in subsequent years. So in the year subsequent to when you obligated, right? So year 2 or later. So now let's say we have a decrease in the dollar contract or, a change or modification. Now, if this is unpaid and it's in the year after obligation, we're going to have a downward adjustment. Now we have an increase in that dollar value. It's an upward adjustment. Now, if we have a change in that budget accounting structure, this is really just going to it's going to adjust your unpaid obligations. So you're not going to post an adjustment for just a change in the standard structure within the same TAS, right? Now, if you are posting from one TAS to another, that is a dollar value change, right? It's because they're different TASs. So you would reduce one TAS and increase the other, downward and upward. Now, if you have paid accounts, it's a very similar situation we have. A decrease in the dollar value, so you had an overpayment, you're going to record a downward adjustment. If you have an increase in dollar value, it's an underpayment, right? You're going to record that upward adjustment. Now, once again, if it's just a change in your budget or accounting structure, your attributes, you're just going to adjust that with your overall paid obligations. So it's not changing the dollar value. And once again, if it was noticed that it's from one TAS to another TAS, you're going to have a downward adjustment and an upward adjustment. And as we mentioned, all of these are done in good faith. But what if this was an error? Not a change that happened through just a normal course of business, but a legitimate error. Now, errors you do not post an upward or downward adjustment for an error. There is a way of handling these, and there is a way of posting errors, and it involves using an attribute for prior year adjustments. But we're not going to go into that specifics and the logic you need to determine how to post that here. But just know, an error or a mistake is not an adjustment to prior year obligations in this aspect with a downward or upward adjustment. So now you ask yourself, how do you post? So if it's in the current year, as we mentioned before, you just adjust your obligation account. Is it a 4801 where you need to correct or update a budget object class? Just make that change, not a big deal. Now, if it's a year subsequent to your obligation, you're going to have to post to your adjustment account. Is it an upward? Is it a downward adjustment, depending on the situation? What you need to not do is do not post to your obligation account. That account stays as it is, not for adjustments. Now, adjustments will close into your obligation accounts at year end. So that is why you don't touch them. And remember also, these obligations, they report to various lines on your financial statements. And that's telling us a story of what happened over the year. And that's why we don't touch those obligations if it's a upward or downward adjustment to our prior obligations. So let's talk about a very brief example of how you could post a recovery, a downward adjustment. So you'll see here the transaction code D20. This is for a downward adjustment of an unpaid prior undelivered orders, and in this case from an expired fund. So you'll see here we posted our debit to our 4871, and then we'll post our credit to 4650, or allotments expired authority. Now, I want to note in this particular example, none of these amounts recoveries are anticipated, right? So this is what you record during the year. Now, what you'll see here is our closing entry. This is after the fiscal year has ended and you're doing your closing entries. Hence, when you see the transaction code F, it's closing. So F332, this is where we're closing and reducing our 4871 balance. In this case, let's say this is all we had is that 100K. Reduce that to zero. And then we're posting to our 4801, or undelivered orders unpaid balance. We're increasing that. So that way, the next fiscal year, we're going to be starting with that 600K balance in our 4801. So just to really help us visualize this, on the left side, you'll see our pre-close balances in our little T account. Let's say in our pre-close balance for 4801, we had 500K going into it. Then we had 100K recovery recorded. You'll see 100K there. And then in our post-close, you'll see how that 100K that we had in recoveries closes to 4801. And then our 4871 account has a $0 balance because we closed into it. So just remember the big thing from this. So the big takeaway here is that obligation accounts are not touched for your upward and downward adjustments. Those accounts stay on their own until the closing entries. I want to say thank you for watching our training video on how to adjust obligations. If you like what we're putting out, please like our videos and subscribe to our channel, and give us a comment on what you might like to see in the future and what we could do to improve. Thanks.